video on natural gas, and I'm gonna give you guys a breakdown of a couple things I'm looking for in natural gas and tips on how to trade it, and looking forward where I think what the price action will be in the next couple weeks. And we'll start off by going looking at the daily time frame. So this is UNG, which is the tradable ticker for natural gas. And right now, from this A to B move, we have bounced over 40%, which is a very notable move. But the problem is that we have retraced over 50% of that A to B move. As you can see on the Fibonacci line, is already over that green line right here, which is over 50%. And that's a bit of a red flag for bulls, because if bulls want to see is to retrace less than 38.2% to have a bull flag like this, and then break above higher to form a trend. We did not get that, and since because of this gap down overnight, it was a pretty surprising move for most people, caught people off guard. And now we are back below in this chop range, and we broke below it. So this chop range here was where a lot of people accumulated, and you can see once we broke below it, people got stopped out here. And we broke below it here again. Bears closed the candle below it. So the most likely scenario now is we are looking at an equilibrium. So if we can break below this 50% retracement of the A to B move, now we're looking at a tightening range with the equilibrium pattern. So we're really likely chop before and within the previous move. So this move would be within this move and would be within this move. So when that happens, we're looking for less volatility and until that pattern breaks. So once we finish chopping in this range, and you'll see it getting really tight. So the price action will be coming to really close with each other, and it'll be really tight. And then once it either breaks upward or downward, then the volume will come back in again. We'll get moves like these kind of moves again. So we'll see. That'll probably play out. Let me see here. Probably play out within a couple weeks. And support and resistance I'm looking at right now would be the daily 12 EMA. So you can see we have is a resistance over here when we couldn't get over it. But once we got over this teal looking line, 12 EMA, we bounced off of it once, twice, and essentially once we get back down again, it's acting as a resistance again. So that's the rule where support becomes resistance, resistance becomes support. And if you wanted to trade on a shorter time frame, which is the 15-minute time frame, if you're scalping, you'll likely be scalping a shorter time frame. But of course, you'll be looking at all time frames while you're scalping. But still, so this is a 15-minute time frame. You can see a clear rejection of the teal looking line as well, 12 EMA. It just trends down all the way. And once we broke above it, it chopped around. So bulls didn't make any moves. We broke above it, and bulls didn't really show up. And you can see that you just chopped around, and bulls didn't play offense. Bulls played defense, but they didn't play offensive at all. And then we broke back down again, and you can see we've been trending underneath it again. So if you're a day trader who's shorting natural gas, you can use this as a guide to hold your position until it breaks back above it. So for example, if you got in here, you could hold your move all the way down here. And once you broke above it here, you can close your position, and then you wait for the next move where it goes back down, and you can re-short it here again, and you can hold the entire move back down again. And right now you're still safe. You're underneath it, and you just put a stop loss above your that area. And if it goes above it, you stop out with a profit. Natural gas sometimes would break very often actually, one of its characteristics is to break a resistance and have no follow through, or break below a support and have no follow through. So the most recent example that we got is this one here. So essentially we had a rising wedge over here on this move, and we broke above that rising wedge. I had that drawn out last week. We broke above it with this big bull candle right here. This rising wedge was, let me see if I can get it back here. was looking about like this. It's about a rising wedge over here on that bull move up. And next day we broke above it with really a lot of volumes and with no follow through. That's what natural gas usually does. So we broke above a resistance line and essentially gapped down on Monday right here, and we had this huge drop. So right now, potentially, where we this on Friday where we broke support, this orange looking line where we broke below this cluster area, there's a good chance where we broke below it, make a wick here, lower wick, and then bounce back up and make that equilibrium. That's what I'm looking for in the next coming weeks. And yeah, we'll see how Monday and this coming week plays out. And if we do bounce, then equilibrium is very likely. And right now, bear is in full control. You can see the time frames, 15-minute time frame downtrend, still favoring the bears. And until then, bulls need to show up and do some work. Otherwise, the bears are still in full control.